following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate the growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about taking action, not attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials up 38, NASDAQ up 25, S&P's up 6, gold contract up $4.80, trading at $13.31.20 an ounce. Silver down 2 cents, $16.55. Light sweet crude off 11 cents, $59.18 a barrel. Copper. Big move on copper, folks. Up 7.5 pennies, $3.16 a pound. Big number out there. Notes. 10-year note, down 5 ticks. Up 5 ticks, rather. 121.02. 30-year bond, up 10. 144.23. King dollar, down 541 ticks, trading at 89.555. The euro is trading at 123.62 to $1 US. The yen is at 107.69 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you got? This is pretty cool, folks. As we come into the last 60 minutes, you got a little battle going on here. And I'm going to bring this up intraday for the last 2 days so you can see where this battle is laying out. Let's see. 1, 2, 3. I'll put it up at 2 days first so you can kind of see how clear this is. So the battle is laid out at the highs of yesterday. You know, bottom line yesterday, you go downtown at the open. We get down into 26.20. Huge expansion topside once again. Do a nice counter trend bounce. 26.71. You come off of that at 3.20. That is what we've been going into since, let's see, since 1:30 this afternoon. That's what it's trying to get into. And whoever that seller is, he, she, them, all of the above, they're sitting there and they're selling. And if we're going to break this area, you need a lot more volume, because what has happened here is that you have volume that's dying on the vine the longer that we go sideways at this movement. You know, the spike higher had 20,000 contracts, 20,600. Well, you know, you're going into 35,000, you're going into 52,000, you're going into 155,000. So whoever the operator is sitting up there, that operator basically keeps selling into it each and every time that it tries to get up there. We take a look at the NQs. You're going to see the same type of setup inside the NQs. NQs right now, they just about hit the high. So they let the NQs get a little bit further. We put this back, and I put this on a 2-day also. And what you're going to get there is you're going to see the NQs, the same time frame, 20 past 3, 65, 67. We hit 65, 66 today. First time we get up there, you get up there with 6,000 contracts. Well, you're going into 6,700 contracts. You're going into 10,000 contracts. and you're going to 19,000 contracts. Same type of setup. It's been trying to get up into that area since 20 past 1. So there's the bulls and bears. That's how it's straight. That's how it's set up at this particular point, and we'll see which way this is going to go in the next 60 minutes. Gold contract. What do we have with gold? Gold contract trading at a price point of 1331.20. We got down to 1323 today. You've done 188,000 contracts. Not bad, not great. That's kind of how this is set up. You know, we did reject lower price last week at the 1309 area. Now what you have, you're into the downdraft. No, this is good. Okay, so we're into the downdraft of the 6th. Now, the 6th of February, we went from 1349 to 1322. It's not bad. We're at 1331. What tends to happen is that when you get into a bar that far, meaning in this particular case, we got into this bar by $10, that's a good setup saying that your probability gets better that you're going to go up to the top of that bar. Silver. Let's go take a look at the silver market. Silver out here right now is trading down slightly. We've done 67,000 contracts. Yeah, silver needs more volume. 1652. It's not bad. Okay, so silver also got back inside a range, but right now we're only 3 cents inside it. You know, and this range is a monster. This is equivalent to when gold went down on the 2nd of February. Silver went from $17.22 to $16.52. Silver's going to need a lot more juice to get up into that area. Bonds. We take a look at the 10-year note. 10-year note out here right now up 5 ticks, 121.01. 10-year note also needs juice. You know, we tested the lows of yesterday, of last week rather, tested them with lighter volume. When you do a test, folks, what you're looking for after a test is you're looking for some kind of strength. We don't have it yet. What we are going to have, what's going to move oh, here, let's go to King Dollar. So if we go over to King Dollar, we take a look at King Dollar. What you're going to see with King Dollar is pushing lower, slight expansion of volume. That's saying that, number one, it looks like to me that it's going to go for the swing low of the 25th. Now, the high of the low is 89,415. The low is 88,255. It looks to me like we're going to go after that, and more than likely what we're going to have a little fireworks tomorrow morning when the CPI number comes out. That's how this seems to be setting up right now. We'll see whether we come up with a hot CPI number. What we did have out here today, Powell, the Fed chair, Jerome Powell, he suggested that central banks would push ahead with gradual interest rate increase even as it remains on the outlook for threats to the financial system in the wake of the recent stock market rout. Bottom line, folks, you know, March, I suspect they're going to go up. Bottom line, what you're probably going to see, the market's going to take a conniption, and guess what? From that point on, the Fed is going to be driven by the market, not vice versa. You stay right there, folks. We'll come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 65. You get the Nasdaq up 37. S&Ps are up 9.5. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil's got a great program right here at TFNN every trading day, noon to 1 Eastern Standard Time. Also has a great newsletter, the opening call. The way you get the opening call, you come over to TFNN, you go to newsletters, you're going to go to trading newsletters. 30 days, money back guaranteed. Check it out, folks. Great newsletter. You can call Basil, of course, each and every day at noon. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very good. Thank you.
Yeah, February. It's almost Valentine's Day.
Valentine's Day.
Yeah.
Next, we'll be talking spring. Of course, you hit spring already. We have to wait a long time.
It feels it, right? Down in Florida right now, folks, we actually had a heat wave. It's been 80 to 82 every day for the last 4 or 5 days, yeah.
Well, send it up to us.
I will.
I can take it.
I will. So, what are we going to look at here, Basil?
So this is what I'm looking at. If you're looking at my charts, folks, on the left is the daily, in the middle is the weekly, on the right is the monthly. And for those of you who are used to my charts, you'll know that I put the Chapman wave notations. Basically, what we look for is the lowest, most obvious low bar merely count each successively higher peak. And we label them alphabetically, A, B, C, D. At the 4th highest peak, that's where other things can happen. It can go higher, but D is what we're looking at. D is what it made at 26,616 on the Dow on the 26th of January. Pulled back sharply. We were fortunate we did get short, not right at the top, but just off the top. And then we covered a little early, but we also went along the Dow because on Friday I was anticipating for subscribers that there should be a sharp reversal. We got along a little early. We took a tiny little 0.8% loss, but we managed to grab the long side yesterday. So now what we're looking at is there's a chance, and this is very important for me because, as you know, I like always to set up the 3 time frames because it gives you a sense of what you're looking at. I like to look at the larger tide. So the larger tide based on the monthly chart is still very strong. It's an up. The monthly chart is still technically very strong. The weekly chart suffered a lot of damage with that 3,000 point move from the 26,000s to the 23,000s. What's really important is, and I said to subscribers, so in my opening call every day, it's a very comprehensive look at the markets, and if I can find it right now, yep, there it is. So I wanted to show you that So what I'd said, for instance, this is a good example. Today, if I can go there it is. So here's the Dow, the same chart I just showed you, except this is what I showed the subscribers because I showed without the technicals, without the MACD and stochastic on the left. And on the right, I put it in. You can see the MACD here on the right is still very weak. It's taking a lot of energy with the big move up that we had from Friday afternoon. And yet it's only now starting to turn a little bit to the upside. And the stochastic, I'm shocked, I'm surprised that the stochastic is still way down. The unbalanced volume has rallied very strongly. So what I'm looking at, so this is the pattern that I looked at. We completed a Chapman wave 5 to the downside, had a really strong bounce. Now I can take, and I said to subscribers, if between, I usually talk about 11:10 Eastern time, but today I said between 12:20 and 1:05, if the Dow is minus 40 to minus 20s, then a weak close is likely. And what happened is that's the exact moment we were down about 80 as I was doing the show, finished the show, and within seconds, the market ran up very strongly. So at 105, 110, the market was already up, and that was a good sign. That's what I said. That's what we needed. So there are a couple of things I'm looking at. This is very selective. We're still short the semis. We've taken some real nice profits, still have a short position, and they're still very weak. Still short a home builder, and if you look at the home builders, I'll just do this quickly. Right here, you'll see that the home builders, this is the iShares Global Timber and Forestry ETF, very weak. And here's the weekly chart of the Philadelphia housing sector, and it's had its biggest pullback in a long time in the shortest period of time. So we remain short a home builder that's gone from the 33.5 area. It's now down at the 28th. We've taken some profits. I think that that's an area that, because of rates still going up a little bit more, I think that that's an area to be careful of. So in the Dow, what's really needed, we're trading at 24,645, up 44. I want to see by I was saying by Wednesday we should see the 24,700. I think we need to be even above the 24,817 9-period moving average by Thursday or Friday. If it can hold that, that'll say, phew, at least for the interim period, we've got a very nice bounce coming. But I think that the damage that's been done here, this is pretty severe. So what we're long, and I'm going to be looking to make a decision whether or not we go back to the short side in this H formation, which is a very important pattern that I like to look at. If it rallies further, we're going to have to make a decision. So we are long. We have a couple of long positions. We have a couple of short positions. I think this is, in fact, at this particular point, a mixed market, and we've got to just start to look at, for instance, you spoke about the commodities. I think we are starting to see some activity in the commodities, and certainly my inclination is to think that when inflation actually starts to kick in, it's going to be quite vicious, because I believe that there are a number of things in the food area, in the area that when you go to shop, those are the things they're not really counting. And I don't have to tell you, you can go to supermarkets. The packets used to say 12 ounces. Now they say 10. They are smaller packets with more, the prices are more. So I think that there is inflation. It's just not really being counted at this particular time. I suspect it will show up sometime this year.
Yeah, it's pretty, the inflation deal is pretty intriguing in general, I think, all the time, right? I mean, it's like, give me a break. Like, housing's more expensive, insurance is more expensive, food's more expensive,
your
school's more expensive. Yeah,
absolutely.
It definitely is. It's
So what Amazon has done is really important. It's started to commoditize a lot of the areas. So that, thank goodness, because could you imagine if we didn't have something like an Amazon being able to cut the prices? They don't cut everything, but it certainly made competition for prices. Otherwise, prices would be sky high for everything.
No, there's no doubt about that, man. It's gonna be intriguing watching, like, what this number's coming out tomorrow morning. So the CPI folks coming out tomorrow morning, and in that context, I'll listen to this. This is pretty intense. There's a bet out here right now in the bond market, folks. It got put on today, and what the bet is that in the option market, they bought $6 million worth of spreads, 10-year spreads on the 10-year note. And it looks to me like this is probably a hedge. But
is there a bias, or is it just, do you think, straight hedge?
It looks to me like it's a hedge. The reason being is that if they were making a directional play, they wouldn't have traded a spread. So what happens with a spread is that they have a range that they're looking at. In this particular one, they're looking that the 10-year is going to back down to 2.75. That's where, you know, so, and it's 2.8 right now. So it's going to be intriguing because this is the first, and this hedge, so check this out. This hedge is bigger than the whole long position of the 10-year note right now for the ones that are expiring on 3 weeks from this Friday. So
really,
yeah,
and I've got a peak D in the 10-year. I think it's going to pull back a little bit next week.
Yeah, so that's this. So there's going to be firepower, and that could actually give us some firepower actually coming into the close out here, folks, because there's a lot more than people than me that know this thing just took place. It only took place about an hour and a half ago.
Oh, really?
Yeah.
Hot off the press. That's
a beautiful thing. Folks, get over to TFNN. Try out Basil's newsletter. Basil, thanks so much, man.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Dow right now is up 53. You get the NASDAQ up 34. S&Ps are up 7.5. And when we were just talking with our man, Mr. Basil Chapman, so let me go over this bond trade with you, because this is pretty cool, folks. So picture, you have the, right now, if we go over to the, we'll take a look at the yield. Right now, your yield is 2.82 on the 10-year. So you have two different trades that came across. The first one came across someone paid $2.8 million for the spread trade on the 10-year Treasury. And then about, it looks to me, let's see, it doesn't say exactly. Yeah, it just says not long after another 3.1 million trade came across. Now, both of them are looking, their spread trades, both of them are looking for the 10-year to fall to 2.75, which is not a huge amount. But that, I suspect, is predicated, well, it's probably predicated on two different things. You have the CPI tomorrow morning, so they're getting ahead of the CPI. That's why I think this close is going to be kind of interesting out here today. For some reason, the markets start worrying about the CPI, that inflation is really out here. So, because if inflation is out here, you're going to see this market go whipsaw in about 2 seconds. So that, I would say that that's the first aspect of it. The second one is pretty cool also, though, because the second one would be that you just have high volatility within the next 3 weeks, and people actually go in the 10-year, and that could reduce that by 100 basis points. It's not the end of the world, you know. But what is happening, which is pretty wild, is that this hedge is actually bigger than the net long position, and simultaneously, right now, we have the large speculators have, this is a record short position inside the 10-year. Okay, so that that thing is the 10-year. Let's look at this 10-year. This 10-year is going to have some monster volatility, man, because if it goes down, meaning the yield goes down, price goes up. If you have the largest short position, that means that you have lots of traders that have to cover, number one. Then you have the aspect that the option position is going to work. That'll put some firepower into it, and then we'll see how that shakes out. So I believe that's at 8:30 tomorrow morning. That CPI number is going to be coming out. If we go inside the Dow Industrials, we take a look and see what the strength is versus the weakness out here. Strength inside the Dow. 3M is putting 15 positive points. You got Goldman putting 15. Caterpillar's putting 12. Apple's putting 11. Walmart's putting 10. The only down out here today, big down anyway, is United Technologies. That's putting 10 negative. DuPont's putting 6. McDonald's putting 6. Chevron's putting 5. If we go inside the NDX 100, the strength versus the weakness out here, strength is Tesla's up 2.5%, Series up 2.4%, NetEase up 2%. You got Mealy up 3.2%. Taken away from it, Henry Schein's getting hit. That's down 6.8%. Regeneron's down 5.3%. You get Microchip Technologies down 2.9%, and Take-Two Interactive is down 1.8%. So let's go to Regeneron just for a second. So $18, it's down 18 bucks. Oh, this is in trouble. This is a monster ABC down. Let's see what we got here. Oh, good old Regeneron. I hadn't looked at this for a while. This is trouble in paradise for Regeneron. So Regeneron broke out of this range. The bottom of that range was 351. It took that apart last week when we went downtown. That puts game at 274. That's another 50 bucks down. Oh, this is serious business for Regeneron. Okay, this is a classic. Man, oh man. So Regeneron, 226. That's another 100 bucks down. That's where this thing is. This is an equity, of course, that went topside, had no volume on the way up, all the way. The last time it had any volume was at 296. Goes all the way to 600. Comes off 600 like vengeance. Bust that. Yeah, this is going to be a problem. Let me go to the IBB. Let me see what this IBB looks like. So IBB has a high volume low. Okay, the IBB is not as bad, but the IBB does look like 82 is game, and right now you're at 107. So this volatility is going to be out here for quite some time. So the S&Ps, let's go back over to the S&Ps. Yeah, the E-minis are trying to get into that high where the NQs have already tried a dozen times and they haven't made it yet. Well, I guess the E-minis can't. I thought it got above its high from this morning. It hasn't yet. 26.66. You're right next to it. E-minis are having a harder time than the NQs. So let's go to the small caps and take a look at the small caps out here. IWM. Okay, yeah, just like yesterday, the small caps look a bit stronger than the market. Now, this is the small caps definitely. This is light volume. There's no doubt, but it won't give up price. It didn't give up price yesterday. It's not giving it up. Small caps look like they can be gamed to 150. Right now, you're at 148.66. It's coming into a monster amount of volume, but bottom line is that it looks to me like, yeah, you get a little more action on that. Let's go to Amazon. We take a look at Amazon. Amazon, that's up on light volume, 29 bucks. Facebook going down 17 million shares. Facebook is going to, they're coming into some major heat, I think, all around. And the reason I'm saying that is that what you have now is that you have large, basically people in the tech business saying that, hey, you know what? Facebook should be regulated just like cigarette companies. That's what the CEO said of Salesforce. And what that's all about is the aspect of what you're putting out there, what's real, what's not real, all of the above. There's a big conference in California today, and it's an advertising conference more than anything. But he was out there preaching, and it looks like Procter & Gamble is starting to pay attention that they might start pulling ads from a lot of these social platforms. You know, they just start doing them pretty dramatically. And the bottom line is, if that happens, if that turns into an avalanche, you are going to see some heavy destruction pretty quickly. Now, the way that Facebook is set up, it looks to me like you get this high volume low that's been laying out there at 161. We're at 174. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now trading up 91. NASDAQ is up 41. S&Ps are up 11. We'll come right back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Excuse me. Sorry about that, folks. Excuse me. Dow Industrials right now up 46. You get the Nasdaq up 33. S&Ps are up 6. Let's take a look at some of the higher volume stocks out here as we come into the last 19 minutes of trading. Twitter's caught a good bid once again. That's up 255, trading at $33.50. You get Under Armour. That has been a mess. That also caught a bid. That's up $259, $16.81. You get Apple up $1.60 at $164. Cisco Systems up 59 cents at $41.19. Freeport McMoran up 22 cents, $17.80. Wells Fargo's up $1.47. You want a fake account? Just go to Wells Fargo. They'll give you one, folks. Don't worry. They'll sign you right up. NVIDIA up 487, trading at 232. Let's go to NVIDIA first. NVDA. This is a powerhouse. There's no two ways about this. NVDA. Okay, so that's up $4, but that's struggling a little. That's going to be interesting watching this thing shake out. Okay, so that's struggling. Yeah, it still wants to go highest. 238. We got up to 238 last Friday. It has some juice up at that 238. That looks like it's still game out here. The as we're coming into this close once again, this number, this is quite a battle. We haven't seen a battle like this for quite some time, folks, between the Bulls and the Bears, and particularly when a number has been so clean, meaning that you know where it's at. And what I'm talking about is, of course, where that sell down came from yesterday, because the way that what happens is this: the longer that you actually stay next to highs, your probability does go up that it can make it. That being said, as we are coming into tomorrow morning, this is not going to make it. And it probably has to do with the CPI. It probably has to do with this bond trade, and it could be all of the above. But the last spike that we just had, it got up to this 65.71, which got over the highs of yesterday. And, thus far it hasn't been able to hold them. They basically sold them right down from that area. S&Ps did the exact same type of setup, the E-minis. E-minis just got to 26.67, and we haven't seen this type of action for a long time either, that you get the spike, and the spike on the other side, then they sell right down. And most times what that actually means is that you have an order. That could be the exact same trader, by the way. You have an order that's up there as a sell. The trader spikes it to see if there are any more buy orders up at that top. When there's no more buy orders up there, guess what? Then he basically, or she basically, is basically selling into that but they're trying to figure out how many more buy orders are up at those higher levels. XAU, HUI. Let's go over and take a look at the XAU first. XAU today, sideways market, not bad. Let's go take a look at the volume from yesterday. So, okay, so that wasn't bad. Volume yesterday was 40 million. You're going at the 46, so that means we're going to need more volume there. Gold Bugs Index. HUI. Same sideways move, 43 cents. 25 million going into 29. Yeah, they're both going to, bottom line, need more juice as they try to climb into higher price. We go take a look at AEM, Anico Eagle. This is a pretty good setup. Yeah, I like this setup. Okay, so this rejected lower price on Friday. You go top side yesterday, do 1.6 million. Excuse me, folks. You're going into 1.3 million, 1.4 million. You're doing $1 million today. It's rejecting lower price. That's a decent setup. Let's go take a look at a few of the royalty stocks. Royal Gold first. That's a decent setup too. That's good. Royal Gold, this one needs some help because it came down so hard on December 28th. But it's getting it today. Franco-Nevada. Okay, this is a good setup. So Franco-Nevada had some volume yesterday. 944,000 going into 880. You could follow through today. That needs help also, but it's getting there. And Gold Corp. Not Gold Corp, Rheingold. Rheingold needs some help. Rheingold Resources. That needs some help. Rheingold's $85.06. That's going to need some help, though, no doubt, in order to get up, stay up, into higher price. We go take a look at, I know, copper market. Let's go, that copper market, man. Now, this is, if you're a commodity bull, this is a big number, man. Copper's up 2.5%, and it's been in a big consolidation. This is a good move, man, because, you know, I expected copper would get down to the bottom of the consolidation, which is 294. You know, it stopped dead in its tracks Friday at 302. You're back in the larger trading range, so now copper's game to 322, and the top of this range is 332. So that's also saying something realistically probably about, number one, the demand on copper, but number two, which may be bigger, is where this dollar's going. The dollar is the big number. Let's go see what else inside the commodity market is moving out here today. You get natural gas up 2.2%. Cocoa is up 1.4%. Now, cocoa was taking a dive in a big way the last week. You get soybeans up 1%. You got gasoline up 0.4. Lean hogs are down 1.5%. Sugar's off 1.2%. Wheat's down 0.5%. Silver right now we're trading at $16.53. And 1652 gets you in the higher range. You know, that says to me that silver still needs a big bid. You know, it's not great when you just tuck your head inside the range and then you can't get the higher price. And that's, thus far, that's what the silver has been doing here. You know, but we know that silver's been the laggard. The yen, if we go over to the yen, now this is the big number, folks. You go to this yen today was hammering the lows. If we take this up, what you're going to see, the yen is just about ready to get out of its trading range. In fact, I can make the case that it's out of its trading range right now. And that trading range that the yen has been in is since, let's see, November of 2016. If I put the correlation up here, and if you want to see something that's pretty intense, the correlation between the yen, and I'll put the gold contract up on the other side, GC1. Let me see. GC1, okay. You're going to see this correlation is pretty intense. Actually, that's a weekly. Let me put it, I'll put it 2 years. You're going to see the correlation. If we get that breakdown, which is pretty intense, 2016, yen was running into this, you know, under 100. that's when gold was up at its highs. So the correlation is pretty direct, and that is something that you absolutely want to keep your eye on. Dow Industrials right now up 67, Nasdaq's up 36, S&Ps are up 9. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 65. You get the Nasdaq up 35. S&Ps are up 9. And don't forget, folks, as you come over to our website at TFNN, we have open house in our Tiger's Den, folks. That's our trading room. 30 days, absolutely free. Check it out. Tell your friends. Bring them all over. Great time to be with a lot of tigers and tigresses, getting your ideas, taking a look at this market, taking a look at different equities, currencies, futures, whatever you're into. It's all over there. So the way you do it, you just go to TFNN. You're going to see it right on the top of the carousel. Open house, Tiger's Den. Come in for 30 days, see what you think of it. Bottom line is that the vol's out here. There's no two ways about it. A lot of good trading ideas, no matter what you're trading out here. As we come into the close out here, this is pretty cool. We got, for some reason, gold is catching another bid. Right now, you get gold up $5.70. $5.60. It's catching a small bid. So we hit a high out here at 5 o'clock this morning, 1333.50. Bottom line looks like it's going to actually go after that. Let me go back to that yen just for a second. because what we are going to get, you know, most of the action inside the yen, folks, is when the Asia is opened. Yeah, right now that's not moving around. Overseas out here today, what we had, you had the DAX traded down 0.7%. The CAT was down 0.6. The FTSE was down 0.1. If we looked at Asia last night, the Hang Seng was up 1.9. You had Shanghai up 0.9%. Shanghai's been a mess for a long period of time. Right now, you're at the 31.84, and you talk about a fast move lower. This thing went from 35.87 January 29th down into 3,000. You know, so you're talking about a monster hit in a heartbeat. And Shanghai really, let me just see this a little bit longer. That's not bad. 2008, yeah, it's still double 2008, but that's it. You stay right there, folks. We'll be coming back with lots of numbers after the close. We have the Dow Industrials right now up 46. NASDAQ is up 32. S&Ps are up 7.5. We're coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love coming out of you makes you happy. The whole world can love you, but that's not the love that'll make you happy. What will make you happy is to share the love that you have inside of you. That is the love that'll make the difference. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 39, NASDAQ up 31, S&P's up 6, gold contract traded up $5 at $13.3140 an ounce. Silver down 4 cents, $16.53 an ounce. Copper, big bid on copper, up 7.5 pennies. Copper, $3.16 a pound. Light sweet crude, off 10 cents, $59.20 a barrel. Notes and bonds, you get the 10-year note, up 6 ticks, 121.02. 30-year bond, up 13, 144.27. Both notes and bonds, folks, still need to catch a bid. King dollar down 511 ticks, trading 89.585. King dollar continued lower, had a bit of volume. Bottom line, King dollar looks like it's going to be going after its swing low, and very well just may be this CPI number tomorrow morning. So CPI is coming out at 8:30. Markets worrying about inflation. Bonds are worried about inflation. Dollars are worried about inflation. Metals are worried about inflation. Bottom line, folks, we'll see what it's coming out at 8:30. Euro is trading at 123.56 to $1 US. The yen is out at 107.82 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We go up and we take a look at the SPY. What you're going to see out here, you're dying on the vine, folks. That's the bottom line. That's what this SPY is doing. You're up 71 cents. If you just want to see the correlation here, it's pretty intense. Yesterday, well, here, first off, when we go downtown, you go downtown with 355 million shares. We do a, so that was on the 6th of February. The 5th, we go down with 294 million. The 6th, we go down with 355. We do the first counter trend bounce, and we do 167 million shares. We give that up very quickly. Last Thursday, we go back downtown with 246 million. We make a low with 283 million. And what's the market do? Bottom line, yesterday you bounce, and we do 143 million. Today you bounce with 75. Cuts it right in half. Number one, I think we're still going to probably try to test the 268 area, but you can see the correlation. The correlation, the energy is expended. Bottom line, your high volume low, more than likely is going to get tested of 252. I think that probability is pretty good. On top of that, you very well could have a monster ABC structure on the way down. That's how this thing is laying out right now. And the NDX 100. Same type of setup inside the NDX. NDX went right 100. We came down on the 5th of October with 105 million. 6th of October, 118. You do the counter trend bounce with 91. Guess what? Come back downtown again with 94. You make a low last Friday with 113 million. And then what we did yesterday you went higher with 63 million. Today, anemic beyond belief, 31. So bottom line, I expect you're going to see both of those. And I expect that the way this is being laid out right now, it's going to be all about the CPI tomorrow morning. It's going to be, the volatility is going to be in here, stay here, in here in spades. The volatility, the index hasn't gone down. We're at 25. So the bottom line with 25, you can expect 1% moves up and down all day long. That's what that basically means. Gold contract, bottom line, caught a bid in gold. Silver needs help. That's how this is straightening it out right now. We go over to the 10-year and the 30-year. They both need help. They both need more volume. They need price spread. Let's go over to the oil market. We take a look at the oil market. Crude oil today traded $59.17. Now, crude looks to me like, number one, you're off the highs. We came off those highs at approximately 67, I think. 66, 66. You come off the highs. You had volume off these highs. What you're going to probably get out here today, tomorrow, the next couple of days, because we're going to get the inventories. It looks like you're going to get some kind of a small bounce. That being said, it looks to me like oil's making its way back down to this 57 area. We'll see whether 53 is game. You know, why? Well, if we go over to ExxonMobil, we take a look at Exxon. What you're going to see, Exxon is down from $89. You're at 76. And when you take a look at, for some reason, well, it would make sense too, the equities seem to get hit first when oil's going to make a decent pullback. You know, ExxonMobil took a vicious hit. No, there's no doubt. Exxon's still trading. Exxon is trading how at 2006 levels. Now, it pays 3% dividend, but the bottom line is that that's been dead money for, what, 11 years. Yeah, 2008, 12 years. That's pretty intense. And what Exxon is trying to do is get into its high volume low of 66. Right now, you're at 76. If we go to Chevron, we take a look at Chevron. Chevron's in a little bit better shape. There's no doubt about that. Chevron still came down from 133. You're at 113 right now. And Chevron also Bottom line, couldn't break out of its range of $135. It got up to the 133.88, couldn't handle it. That's it. That's put game on, now down to 69. So that range in the oil market is pretty intense. Chevron's range is from the 133 down to $69. You're talking about heavy, heavy numbers. And, of course, Exxon did come out when they come out with their numbers, and they were talking about that they could get oil out of the Permian Basin in New Mexico, which they bought a huge amount of it in the downdraft, folks. They can get out at $15 a barrel. And $15 a barrel, folks, that is the good, the bad, and the ugly for Exxon and for the oil business in general. You know, if we were trading out at $115 a barrel, great. Guess what? When the market itself knows that there is so much oil out there and it's that price sensitive, guess what? We're going downtown. You stay right there, folks. We'll be coming right back. We have the Dow Industrials. They finished up 39. NASDAQ up 31. S&P's up 5.5. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 39, NASDAQ up 31, S&P's up 6.5. Let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday and Thursday. And don't forget, folks, Andy's got a great show here every Tuesday, Thursday, 5 to 6 Eastern Standard Time. And, you know, no matter where you are, folks, you can get all our programming right at TFNN. You can get it right at YouTube. But one of the easy ways to do this, go to YouTube, just pull up TFNN Corp. You can subscribe right there, bottom line, right on your cell phone. Each and every time we put a new program up, you'll get a little notification. Doesn't bother you. You want to listen to it? Great. It comes in great. It's all digital. Good way to listen to us. Good ways to bring us wherever you are each and every day. It's a beautiful thing. And he's got two great newsletters. He's got the Daily Essentials, which is his daily newsletter. He's got the Technomental Commodity Report. Now, you can test drive either one of those or both of those, 30-day money-back guarantee, by just coming over to our website at TFNN. When you do that, you go to newsletters. If you like the Daily Essentials, go to Trading Newsletters. If you like the Investment Newsletter, go to Investment Newsletters, and that's where the Technomental Commodity Report is. Andy Heck, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
Doing great. So we have a little calm today, huh?
Yeah.
Little calm in the markets. I guess tomorrow, gearing up for CPI.
No doubt.
And then we'll have volatility.
Listen, we'll find out whether whether we get inflation or no inflation and all of the above, right?
Yeah, I agree. And, you know, I'll tell you, I'm waiting. I think that this spring and summer is going to be very interesting because I think that, you know, if we get some non-productive weather in these grain markets for the crops this year, that could filter through. You know, we could see some really big moves in the grains, and that could filter through quickly to the CPI. So that's kind of, you know, whatever the number comes out tomorrow, I'm really interested what the number's going to be like in June and July and August.
Yeah, well, you know, that wheat market looks good, man. There's no doubt, you know.
The wheat, look at the beans, back up to 10, where'd they close today? $10.11 a bushel, also looking good. Corn, also strong. And by the way, the WASDE last week was not that bullish.
Okay.
You know, I mean, look, they said corn inventories dropped a little bit, but they're still huge. Wheat inventories are on record highs. But the bottom line is that the low dollar, global demand, demographics, it continues to eat away at these inventories. And you know, there's a lot more people with a lot more money competing for a finite amount of food.
Right, worldwide. Right, that's
worldwide.
Your point. Yeah, right.
Worldwide.
Right.
Yeah. So the bottom line is, I think that we have a really good setup for commodities. We have this huge divergence going on. We got a weak dollar, and believe me, the action in the dollar today is disgusting as far as I'm concerned. I think this thing's going after its lows. Every attempt at a rally fails. Now we have a weak bond market, and the question is, are real rates going up, or is the inflation part of bonds going up? And if it's the latter, that's a potent cocktail for commodity prices on the upside.
Oh, yeah, listen, we could be in a brave new world that we haven't been for a while, folks.
No question. Hey, just a couple of words about some markets that are, you know, that you might not be looking at that are interesting here. Lumber's going after its high, up at 491.50. The all-time high, which we made in November, was 500. Looks like we're headed back in that direction here, maybe to a higher high. So I like the action that I'm seeing there. Copper, yeah. I know you talked about that last segment. Listen, copper continues. I want to put up a longer-term chart here. If you look at a longer-term, copper in this bull market that started back in the beginning of 2016, it has never even gone back down to test a critical technical support level.
Right. No, I know.
So we got down to, what did we get down to? Let's go on a shorter term chart here. I think it was 290, 193. No, I'm just talking about recently. Last week we got down to 302.60 during this whole risk-off fiasco. Right. This thing couldn't even get down to $3. The support was down at 294, the technical support. And now, boom, you know, we're running away on the upside. And we're running away on the upside, Tom, while stocks have gone up 100,000 tons.
Yeah.
So there's a lot of stuff that could, you know, make a great case for a sell-off in copper, but it's just not happening. And you know, when that happens, that means that the path of least resistance is still higher.
No, absolutely, because that means, of course, that people are using it, right? That's the bottom line, right?
The bottom line is they are using it. So if we look at crude oil, which is the one commodity that's been under some pressure, look, I'm not surprised to see crude oil down here in the 50 to 59 area. Listen, crude oil could get to 57, 56 and still look good on the charts here, technically.
Sure.
This is a long overdue sell-off. Look, we had rig counts go up by 26 last week. We have the processing spreads in gasoline and heating oil both coming down. That could be seasonal, but more likely, you know, inventories are building as we produce more oil here in the United States. So I'm not surprised to see crude oil come down a little bit. I was actually surprised to see it up at 66, 66. But I do think we have a very good chance of seeing that price again if we are in an inflationary environment, and perhaps 70 or higher.
Yeah.
So we'll see what happens. But I'm glad crude's coming down. Give us a chance to get some cheap crude oil in maybe in the weeks ahead. Also, natural gas.
Yeah.
Now, last year in February, we've established over the weeks that this natural gas contract is nothing more than a trading sardine.
Right.
Because it doesn't necessarily reflect the prices that are paid in the East Coast, the West Coast, the Midwest, but it is a trading sardine. And last year we got to lows in February, $252.20. In March of 2016, we got to the lowest price since the late 1990s when we traded $1.6110. It looks like natural gas is doing its seasonal kind of probing of the downside here, which will probably put in a good bottom in February or March. We are expecting Thursday about 100 to 170 to 175 BCF withdrawal from stocks, which would be significant for the week, you know, ending last Friday. So, you know, we'll keep our eyes on that. And of course, we have oil numbers coming out, hopefully after the next break, which we can certainly get into. But I think that the main thing that I'm seeing here, Tom, is this dollar index when it comes to commodities. And, you know, once again, failure. We have seen nothing but failure in the dollar since January 2017. And it just doesn't look like anything is telling me. Look, rate differentials favor the dollar. A lot of things favor the dollar.
Oh, listen,
the U.S. economy.
There's no doubt, man. There's no
when
doubt.
a market should go up and it doesn't, ooh, that's a bad sign.
Right, and
wait until some bearish news comes.
Yeah.
Right?
I'm telling you, there's no doubt. When you put this dollar, folks, on, you know, a continuous contract, you're going to see that we already broke the consolidation that had been in place since January of 2015. We blew that away with big volume. You know, your 89 and what's holding the dollar up right now is the highs of 2008 and the highs of 2010.
Yeah, we could be looking at 7 years of a bear market in the dollar here, in my opinion.
Yep. Stay right there, folks. Andy and I are coming right back. Our phone number is 877-927-6648. We had the Dow Industrials finish up 39, Nasdaq up 31, S&P's up 6. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We're talking commodities with our man, Mr. Andy Hecht. We're talking markets. And, of course, don't forget, every Tuesday, Thursday, right here, 5 to 6 Eastern Standard Time, folks. Andy's got a great show. And easiest way to get it, either go to TFNN, hit Tiger TV. Just go to YouTube. Go to YouTube, search TFNN Corp. You can subscribe right there. Then you are getting each and every program as that comes up. And as we kick off in the morning, you're going to get a kickoff right at the beginning of the day. We are going to be talking the API any second here. So,
yeah, while we're waiting for that, I wanted to discuss one thing with you, Tom, get your view on something. I'm looking at a chart of the Japanese yen.
Yep.
And I'm really liking the trend here. And I think that this trend is very bullish for precious metals.
Yeah, no, listen, I'll put up the inverse of it. It's pretty cool what you had out here today, folks. We went from 108.78 for $1 US to 107.41. We put this back. First, I'll put this back on 2 years so you can see the type of. Actually, I'll put it. Yeah, 2 years is enough, because what you're going to see here is that it broke the consolidation that it's actually been in since November of 2016, and it did it basically today. Now, watch this. I'm going to compare this to the gold contract, and when you see the correlation, it's pretty cool. GC. So if you happen to be watching Tiger TV, what you're seeing out here now, folks, is that you're seeing the aspect of when the yen was at, under 190, bottom line, gold was at its highs. And we're talking about the 2016 highs. So the correlation's pretty direct.
It is. And, when you trade gold on an intraday basis and you watch the yen, it's a lot of times, more so than the dollar index, it trades tick for tick with that yen.
Oh, let me tell you.
Dollar relationship. It's amazing.
The yen moves gold. Yeah,
yes,
absolutely. In a large way, too, man. It's not small, folks.
Right, and that's why I put that up this morning. I was like, wow, I kind of like what I'm seeing develop here. And I kind of like that gold got down to 1309 on April. It held. The silver, as you said, listen, silver's got to show us something. This thing has just been a dog. This thing has taken the dog baton from platinum,
Yeah, no, there's no doubt. There's no doubt. But we do know, though, how volatile it is. is, right? But there's no doubt.
You blink your eyes, it could be $1.50 higher.
Yep.
Right.
And, you know, so what you do have here, this is what's pretty cool now, too, folks, okay, is that the, let's see, so it's 4:30 Eastern Standard Time. You know, if you get over and take a look at the Nikkei, okay, so the Nikkei last night, let's see, I want to make sure, because what we're dealing with here is, you're dealing, let's see, so that's good. Okay, so the Nikkei is going to be open tonight. It was open last night. So you're gonna start getting movement, not for about another 7 hours, but you're gonna get movement in that yen tonight. And if that yen, bottom line, keeps going lower, which is stronger, number one, the Nikkei, here, I'll put this Nikkei up for you a second. You can see the Nikkei takes a conniption. The Nikkei can't stand a stronger yen. And the dollar, I mean, the gold loves it, you know?
Right. Right. So now the oil market's waiting on these API numbers, and the bottom line here is, you know, we've come off considerably in crude oil. You know, we come off $7. I mean, that's a nice little move there.
Yeah.
And now it's not, you know, it's not as clear. It was pretty clear to me. I saw a lot of things in market structure that told me that crude was getting a little overjuiced. But now I think we're going to start moving much more with these inventory numbers. So
yeah, so let's see. We get the first one out, and it's a big, it's 3.9 million extra plus.
Oh,
so
that's
big number.
bearish. Yeah,
that's
okay.
a big number.
So maybe we see $57, up 3.9 million barrels. We'll have to see what gasoline and distillates were.
Right.
I'm pretty sure we'll see an increase over there. Probably in the gasoline, but we'll have to see. They're switching over now.
Well, and that distilled last week was amazing. The distilled last week, folks, was 4.3 million extra barrels.
Yeah.
Pump in. That's, you know, I don't know how it is out there, but this is really unusual, Andy. So we got our weather in Florida, folks, this year is the first time it was actually, you know, down into the 40s in almost 10 years, where we are anyway. That being said, what happened is that about 7 days ago, it's been 82 every day. It's like the summer right now.
I'm looking forward to that because let me tell you, it's in the 40s here in Vegas.
Yeah, wild.
It's cold. It's cold. Yeah, it's been cold, but certainly not, you know, like populous like the Northeast and Florida and those areas. But I know that it's warmed up a little bit across the United States. So, you know, other than Chicago got hit with a brutal snowstorm.
Yeah.
You know, so. It's kind of patchy, the weather, but it'll be interesting to see what these product stocks came in because, you know, right now that crude number is gonna weigh on crude oil here more.
Yeah, I'm taking a look. It's going down slightly. Let's see. Come on. It's amazing how they take so long to get these numbers out.
They bleed it out. Yeah,
they do, man. They do.
Yeah, they do. But listen, crude oil is getting down to a little bit oversold territory. The one thing I will tell you that is positive for crude oil, that the open interest, the number of open long and short positions on the NYMEX crude oil contract is falling with the price. And that is typically not the sign of an emerging bearish trend. That kind of is usually a signal for me to do a little light scale down buying. So, you know, if I see that metric continue to drop with price, I think that's good. It's healthy. It's kind of cleansing for the market.
Yeah, hey, can we let's swap gears just for a second and go to cocoa since it's Valentine's Day tomorrow.
Hey, good idea, right?
Yeah.
So cocoa, $2,000 a ton. Let's see, it's rolling now from March to May.
Yeah, I get the May one up, 2036.
Right, so yeah, 2050. The range here, Tom. 1,800 to 2,200. It's been doing nicely since the end of December when we had that plunge down to 1812 when Anthony Ward threw in the towel, and I think they liquidated some positions from November. But we've been climbing back here. The bottom line is it's kind of in the middle of the trading range, but I will say this, you know, the consumers of chocolate on Valentine's Day will be getting a better price this year than they have in past years.
That's too funny.
So that's good news.
You're going to have to give them the crude numbers when you come up. Oh, look at that. Just come up. Oh, there it is. Okay. Let's do it quick. We get Cushing minus 2.3 million barrels. Gasoline plus 4.6 million barrels. Distilled plus 1.1 million barrels.
Yeah, that's not positive.
Yeah.
That's, at face value, shouldn't be that positive, but we have come down, and we are in oversold territory. 58, 57, maybe we make a marginal new low. We'll see. We'll see what happens. By the way, it's all about CPI tomorrow.
Oh, yeah.
All of these markets, I don't care. Every asset class, they'll be watching because the stock market is going to move on this CPI. That is a guarantee.
Yeah, and I guess, for some reason, everyone's like figuring that, I guess, inflation's here, but it seems like people have been figuring that forever, man.
It's here. Go to the supermarket. It's here.
Listen, I agree. I'm just saying that it doesn't come out in the CPI, though. That's the bottom line.
They measure the wrong things.
Listen, folks, 5 o'clock right here. Great show. Go to TFNN.com. Hit Tiger TV. Andy, thanks so much, man. Look forward to the show in 20 minutes.
Happy Valentine's Day.
That's a beautiful thing. Stay right there, folks. Come right back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We take a look at some of the higher volume stocks out here today. What you had Bank of America was the highest volume. That was up 6 cents, trading at 31.18. Twitter's up $2.49, $33.44. Apple was up $1.63 at $1.64. Under Armour, which has been a big dog, that was up $2.46, trading $16.70. You had Wells Fargo up $1.50 at $58. Let's go over to Wells Fargo first. So it's pretty amazing. You know, you got 1 million fraud charges. They paid billions of dollars in fines. And guess what? You know, this thing came off the high. You know, the high was 65. You're trading 658 right now. It did come down with some juice, but it's still amazing that when you take a look at the context of where it actually is, you're still way at highs. You know, 2009 was at $7 stock. You're at $58 right now. And yeah, it looks like you can back down to about 51, but bottom line, still big numbers. Let's go over and take a look at Under Armour. Under Armour this morning came out. Oh, 1 second. Let's see. There we go. Okay, so this came out this morning with numbers. It's in a range. About time it got a bounce. This is really a dog. Okay, so this thing is down from $46. You're at 15. Let's see what they had to say out here. So okay, so numbers. Well, this is going to be a trip. So this did go up, but listen to this. One of the first things that was said out here that they're seeking an amendment to a credit agreement. That's never good, folks. Bottom line is that when you go out and you are getting money, particularly money that is not have an asset underneath it, what tends to happen is that there's certain parameters inside of that, specifically gross sales, the amount you bring into the bottom line, and the amount of expenses that you can incur. And when you seeking an amendment for that credit agreement, that always costs money, number one. It doesn't mean that it's going to fly either. Their margins, I say, they're relatively flat. So here, this is what it was. They see, it's pretty amazing, actually. Their loss is 6 to 7 cents. This is for the first quarter coming out. They said they were going to lose 4 cents. Now they're going to lose 7 cents to 6 cents, and they're blaming the tax bill on that. Bottom line is that we'll see whether it's a non-cash deal. Yeah, it doesn't look to me like there's a whole bunch in here. Let me put this up again. You're coming into your downdraft. You had some volume behind the move. Yeah, you can bounce up to 18 bucks. Right now you're at 14.87. There's not much here, though. That's the real bottom line. That's how that's shaken out. Wells Fargo, let's go take a look at Wells Fargo. Wells Fargo out here, that's trading 58. This bank is definitely too big to manage. And the way this is set up, yeah, this is probably an ABC down. It blows out, monster gap, goes up with light volume. This thing's probably heading down to 49. Goldman, let's go to Goldman, because Goldman is still teetering, folks, at this area, which is the $250.70. That was the high of 2007. We broke it last month, had dramatically lighter volume. You're back close to being inside it. We got inside it on the downdraft. We got to 239. That's going to be a big number, because that Goldman itself will tell us quite a bit as we get to the end of the month again. These are monthly ones with Goldman. And the way that we're trading in the market in general, this is going to be a really important one, I think. What we did have out here today, and this was pretty wild about Powell in general. So picture, we have a new Fed chairman, right? Jerome Powell. He's been a Fed governor for a long period of time. He was talking out here today, and you know, one of his quotes were, "We're in the process of gradually normalizing both interest rate policy and our balance sheet. We will remain alert for any developing risk to financial stability." See if he's got any more. Powell said the Fed has made great progress in moving much closer to the goals of full employment and stable prices since he did join the bank in 2012. So right now, bottom line is that he's been out there for 5 years. Today, the global economy is recovering strongly for the first time in a decade. He said the Fed was moving to normalize monetary policy with the view to extending the recovery and sustaining the pursuit of our objectives. The 8.5-year plus upswing is already the third longest on record, although it has been the slowest in more than 65 years, averaging annual growth of just 2.2%. Powell pledged to preserve the essential improvements made in financial regulation since 27 and 29, while seeking to make sure that the Fed's approach is efficient as possible. The financial system is incomparably stronger and safer with much higher capital and liquidity, better risk management, and other improvements. He also promised to continue to pursue ways to improve transparency, both in monetary policy and regulation. We listen to feedback, and we give serious consideration to the possibility that we might be getting something wrong. There is great value in having thoughtful, well-informed critics. Bottom line, folks, I expect what you're going to see out here is instead of the Fed dictating to the markets are going to be dictating to the Fed. And it's going to be about supply and demand inside this bond market. The bond market itself, you know, bottom line, when you take a look at the rate structure, we're at 2.8. You know, that is the high for the year. For the 10-year, the 30-year right now is at 3.1. That's going to basically, and the 2-year is at 2.1. And if we go back a year, if you just want to see the correlation, you know, so the 2 years almost gone up a full % already in a year. The 5-year has gone up 0.9%, and the 10-year has gone up 0.8%. So the bottom line is that well, no, actually, no. You're talking about. We're talking a lot higher than that. You stay right there, folks. We're coming right back. And, of course, we got our man, Mr. Andy Heck, coming up next. And we have an open house, folks. Traders, Tigers Den, open house. Come on over, visit us. Come in for 30 days. Great trading room. Tigers, Tigresses, invite your friends. Have a field day, folks. Go to TFNN.com. You're going to see it right in the front page. Check it out. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Chipotle, what you have out here, this is an equity that has been getting slammed for a long period of time. You're trading, well, we had a high out here at $758. That was in 2015. I closed today at $251. Monster downdraft, broke out of ranges, all of the above. Right now, you're trading up $30 higher. We are at $281. And good luck to the new CEO here, folks. Bottom line is there's no doubt that he is talented. There's no doubt about that. He has the experience. They are getting the head of Taco Bell, Brian Nicole, as the new CEO. So we'll see if he can basically get a handle on what's been happening with Chipotle. This is, of course, a health story, food story, all of the above, which is really hard to basically break through, and they certainly haven't been able to do it. You know, the way this is trading right now, let's see, 233, it already hit 247. You'll get some kind of a counter trend bounce tomorrow, but 233, yeah, well, we'll see if they can hold the 233 level. When you take a look at this, let's see, revenue-wise, what they've been doing out here. So revenue-wise, they're holding their own. They did $4.1 billion in 2014, 4.5 they're looking to do this year, and 4.8 this year. That's what they're looking for. And money-wise, they're earning some money, $8.46. But for some reason, you're still paying up for it. I don't know why people would turn around and pay $40 for $1 of earnings, because that's what they're paying right now. So that kind of shows you where we are in the marketplace. Also, you're paying $40 for $1 earnings in Chipotle. You better get a head checkup. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Andy's coming up. Of course, look forward to speaking to tomorrow morning, 8 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.